Do you want to buy an apartment, but your earnings do not allow it? No need to worry. The exit has already been found. After watching this video, you will learn about Robert Kiyosaki's scheme, which will help you not only buy the coveted housing, but also invest profitably, providing yourself with passive income. What is the main essence of Kiyosaki's approach to real estate deposits? Based on his experience, Robert recommends buying real estate with borrowed money from a bank and renting it out at a price that will cover the monthly repayment of the loan and additional real estate expenses. Having created such a cash flow, you will come to the fact that your property will pay for itself. Investing in real estate gives four incomes at once: rental income, depreciation, value appreciation and tax advantages, Kiyosaki writes in his book Investing in Real Estate. This approach is quite risky, because in the unstable economic situation in the world it is difficult to make a calculation for the future. The dollar exchange rate is constantly growing, and the national currency is constantly on the verge of default. In the future, there may be such a situation that the money that you took from the bank at interest will be difficult for you to pay. But if you correctly assess all the risks and approach the Kiyosaki scheme wisely, you will most likely be able to succeed and become richer. Let's analyze the basic principles of Robert Kiyosaki's method, and then try to use it on certain examples. Robert Kiyosaki started making real estate investments with an initial capital of $300. To date, he has been able to earn more than $100 million on real estate. You may ask, what is the secret of such success? He became the person who was able to come up with and implement a formula that allows you to earn on real estate by investing in it the minimum amount of your own funds. There are several ways to buy an apartment in a new building today: on credit, installments, mortgages, borrowed funds from the bank, and for 100% payment. According to the Kiyosaki method, the surest way is to purchase residential or commercial real estate on credit for its full value. Thus, you have the opportunity to buy an apartment from a developer for free, as it were, and to have income from this kind of investment indefinitely. But having really analyzed this judgment of Mr. Kiyosaki, we can come to the conclusion that this scheme does not always work in the vastness of the post-Soviet space. In order to get mortgage loans in our countries, you need to have a certain amount of down payment. In this case, the return on your loan investments is limited. Mortgage lending on a real estate object for rent turns into margin trading, that is, trading on the basis of borrowed funds. Moreover, the profitability from such deposits will be less than from deposits of own funds for the total amount. To date, there are real solutions to the situation. Some financial institutions provide mortgage loans in the absence of absolutely no funds for the period of signing the contract. Thus, you can implement the Kiyosaki method. It is only worth noting that the annual interest from such a transaction has a fairly high equivalent. And before I reveal the schemes of Kiyosaki on a certain example, I would like to remind you that if you want to see even more diverse videos on our channel, be sure to support this video with a like. So, an example of the scheme itself. The numbers are conditional. The price of the object, $140,000. The costs of registration, $10,000. Initial payment, $40,000. The cost is $50,000. The loan is $100,000, the loan term is 100 months, and the loan rate is 1% per month. Credit payments are as follows. The first is the body. We divide the loan by the loan term and get $1,000 per month. Then the percentages. The loan is multiplied by the loan rate, we get $1,000 per month. And there is also a loan payment, the body of the loan plus interest. We get $2,000 a month. Also in this scheme there are taxes, utilities and other expenses, which are equal to 500 conditional money, rental income of 3,000, as well as net income. This is income minus the loan payment minus utility costs. And we get 500. It turned out the following. After spending 50,000, we purchased an object worth 140,000, plus a source of permanent income of 500 a month. In this case, it is 1% per month. It seems not enough, because we would have received 5 times more than 2,000 credit payments a month. But no, not 5. After all, the income of 2,500 would have to be divided by the full cost of 150,000, and that would be about 1.7% per month. But we simply did not have such a sum, and if we had, we would have bought 3 similar objects on credit and would have received 3% per month from them in total against 1/70% per month. It is not easy to get such a ratio, but it is possible. The main thing is to discard the bulk of empty, garbage offers that fill the market, and to extract from them, perhaps, a one-of-a-kind pearl. It is unlikely that it will be in the residential real estate sector. First of all, it is necessary to consider office, retail, warehouse space. There are a lot of factors influencing your choice. Since they are not the main topic of this video, we will not dwell on this. Friends, you can write in the comments if you would be interested to find out which real estate is the best place to invest money. If there are enough comments, I will definitely pay attention to this topic. It is obvious that the final income figure could be improved by reducing the price of the object, the cost of registration, the loan rate, the amount of the down payment, taxes and utility costs, as well as by increasing the loan term and rental cost. You can work on each of these parameters, trying to change it in the right direction. This is also a separate and considerable topic. When the loan payment is over, we will be able to receive $2,500 a month, but our costs have remained at the level of $50,000, because our rent paid everything else. The income will be 5% per month, that is, really 5 times more than during the loan. But the most interesting thing will happen next. Let's say 50 of our 100 months have passed, 50,000 of the required 100,000 loans have already been repaid. Let's say the market value of our object has not changed. We come to our bank with an offer. We have an object worth 140,000, which brings in 2,500 net income every month and for which we owe you 50,000. You can see that we are a conscientious borrower, able to fulfill loan obligations, and our income level allows it. Let's carry out a recrediting of our facility at its full cost. You will give us a loan of 140,000, from which we will repay our debt of 50,000, and the remaining money will be directed to the reconstruction of the facility, which will increase the rent payments to 4,000 per month net, as well as an initial payment for the purchase of a new rental facility, a loan for which we will again take from you. Given our impeccable credit history, we ask you to reduce the rate of the new loan and increase its term. The right banks dream of such borrowers and will reasonably agree to meet them halfway. However, the situation in the credit sector is tense now. Borrowers don't trust banks, banks don't trust borrowers. Each country is cunning and is looking for unilateral advantages for itself. In such an atmosphere, it is more difficult to acquire a good reputation, but more difficult does not mean impossible. Therefore, it is necessary to prepare for the implementation of the Kiyosaki scheme in advance. What does this mean? It is necessary to have a positive credit history, to learn how to evaluate and choose a real estate object, to learn how to make and calculate business plans for the rental business and to study the principles of banking work in the direction of different types of lending, to know the rental situation in that real estate sector. It is very possible to buy an apartment and still make good money, as you have already understood. The main thing is not to be afraid to take small risks for the sake of big benefits. And after all, real estate is one of the assets that determines our wealth in the long term, and it should be treated accordingly. Be sure to share this video with your friends or just launch it on your social networks if you think this topic is interesting.